Hi everyone, what are you doing? Hope you're doing well. Welcome to another video. Today's video is going to be about explaining why I'm personally investing in Kroger, ticker symbol KR, and then we're going through my own fundamental analysis. It's going to be a discounted free cash flow because I think this is the valuation that makes most sense for this specific company. And as always, this is not financial advice. I'm just publicly documenting my own personal investment decisions. You do you, I do me. That's the deal. Another thing that other YouTubers don't often say is that each investor is a different person and you might be in different positions, so 100 bucks for you might be nothing, for me it might be a lot of money. Just remember, I am a 23-year-old, I have an entire life ahead of me, and just because I can take a bit more risk sometimes, in this case I think it's more a safe play than anything else, but just because this investment makes sense to me, it not might be the best one for you. And if you want to know exactly when I make my investment decisions, consider following the Instagram page cadete.invest, because I don't always have time to make a YouTube video right away. Normally it takes a week or a few days, but normally in Instagram I post the picture of a company, how much I bought for the strike price, and like some topics with the main reasons. Having that said, let's talk about Kroger. Kroger is the largest retail grocery store. They employ over 400,000 employees, which is crazy. They are really a huge player. Here in Portugal, because I live in Portugal, they don't have a presence here, but if you're from the US or other places, you might recognize some of their brands or subsidiaries, whatever you want to call it. And if you follow this channel, this might not be the type of investment that I usually make, because when it comes to grocery stores, it's all about squeezing those margins. It's not an exciting stock like tech stocks where you have big fat profit margins that I really value. So why I'm making this decision? Well, this is mostly a safe play, or maybe a hedge against inflation, because if things start going sideways or bad, or inflation starts propelling up, well, people still got to eat. And Kroger, being one of the largest retailers, a big player, they have like the buying power, they have the real estate, all the infrastructure, so they can just push that price to consumers. So I think this is a good way to hedge myself. If you want to know more about these reasons, I think you should watch some videos that I made a few months ago explaining long-term debt cycles. It's a series that has like 3 episodes. I'll leave them down in the description. But this is mostly the reason why I'm investing in this company. It's not like it's going to 10x or 2x. It's not exciting like other YouTube videos. It's just part of my investment strategy. Also, I've been selling some altcoins lately because cryptocurrencies are crazy, wild, and I'm taking some of those profits because I never know when they are going to dump. Maybe next week, maybe they can keep even pushing forward, but I sleep better at night in making investments like this one. Having that said, let's jump into laptop. So I have here the laptop, and you can see technically this is you can see, oh sorry, there's a lot of history of this company. I was born in 1998, so you can see that this stock overall, it had some volatility, some ups and downs. Right now it's trading at $36 more or less. I think I bought it for 35 point something, but you can check that on my Instagram page. We are long-term investors here, so it doesn't really matter the price. If you were here, it doesn't really matter if you bought at 10 or if it bought at 11. Having that said, it's important to use a bit of technical analysis to maybe try to get the perfect, we never call it the perfect entry, but better entries. But I want to be exposed to this company, that's why I only bought like 3 shares, 100 bucks, just to be exposed, because I think you should be invested in the company if you want to follow, because I have a lot of companies in my watch list, but if I'm not directly invested, I'm not going to pay a lot of attention to it. So right now this was just my first position, and in the future, if the stock dumps, perfect, I will add more. If the stock starts going up, I'll need to reassess my investment. So this is just my strategy. I never go like all in. I always like to dollar cost average, sometimes when the stock is going down, other times when the stock going up, depends. Well, but let's jump into the fundamental analysis, because that's what I wanted to talk here. Ticker symbol KR, you can see here on the top, Kroger. you can see the revenue is not like an amazing growth revenue like other stocks that I've analyzed here. You can see here 3% in the last 5 years. Okay, we had 8% in 2020, but this 2020 has been really an outlier. People weren't eating as much out, so they had to buy their food and stuff. You can see we had here some negative growth. So like the revenue, okay, it's been growing, it's not something really amazing. You can see the margins, like I was saying. I always strive for big margins, but this is a totally different reason for investment. You can see here 1%, 2.5% here in 2019. 1% doesn't look awesome, it's like a boring company. I don't know how to make this exciting for you. I'm just sharing what I'm doing. They expect in the next 5 years, analysts expect a 7% growth. And as always, I calculate 3 scenarios: the normal case, the bull case, which is the most optimistic, the bear case, which is the pessimistic. And in this case, I have one of the lowest rate of returns that I possibly use in all my stock analysis, 8%, because then again, this is like a really stable business. Perpetual growth, 2.8%, nothing like crazy. And you can see here 5 to 3%, we have a fair value of $34 for the normal scenario. The bull case 37, which is more or less it's about touching on those lines. And I'm a bit conservative always because analysts are expecting 7% growth. And this is just for my bull case. I could have placed a bit more, but I like to always be conservative. But this is just me. It doesn't really matter for you because you need to do your own analysis. I'm just sharing it so that you have some sort of reference, and it's important to cross your analysis with other forecasts, so to speak. In the bear case, it's $31, and if the stock, sorry, I don't know what's happening with my throat, and if this stock touches those levels or goes below, then I will reconsider making a big purchase. More than the 3 shares that I bought, but so far the average fair price is $34. And the thing I don't like about this company, but it is acceptable. This is a company that is capital labor demanding, so they have a bit of debt, more than for my taste. But then again, this is more like a company to rebalance and manage the risk of my portfolio, because I'm really concerned, and I think that you should watch those videos that I mentioned earlier. And yeah, that's it for today. This is from Simply Wall Street, but I don't really in the previous videos I used to put other analysis from different stocks, but I normally trust mine more than the ones that I see online, because it is easier for you to hold the stock if you know why you're holding it in the first place, not just because you watched a random YouTube video or just you trusted some random website. You need to know why you're invested in it, because if we have a correction next week, you will not be tempted to hold it. Probably will sell it at the bottom, and that's why I didn't place it here today. But the debt is a bit concerning, but then again, it's a different type of business. I have other businesses in my portfolio that don't have almost any debt, but if inflation is a concern, having debt, it's actually a good thing, because your debt basically gets cheaper. And that's it for today. That's what I wanted to discuss. I don't want this video to be super long. Tell me down in the comments what you think. Consider watching next my playlist about long-term debt cycles. That's the first episode, and the last one is how to hedge against inflation. It's been a few months. I think I talked a bit slower back then, so you can watch it at 2 times speed and you will see that really quickly. Thank you for watching, and I'll see you in the next video. Bye.